Yellen has cited this weak labor markets many times. Protesters there really driving it home. How does she try to get more people back to work at a time when the economy is just not growing that fast?
Well, that's a $4 trillion balance sheet question, Trish. It's interesting because the Fed has done just about everything it can do. We were talking with some of those protesters yesterday, and it isn't clear that they really understand the role of monetary policy or the Fed. They believe that if you raise interest rates, it's going to hurt the economy at this point, and there's certainly arguments to that effect, but there's arguments that we would be better off with rates starting to go up. So at this point, it's a moot point because the Fed's not raising rates. The question is, when do they start? Now, the protesters don't want them to do it at all, but it's beginning to look, with the economy improving day by day, like it's going to come sooner than the consensus view at the Fed of late 2015. We were just talking last hour with Marty Feldstein from Harvard University about that, and he thinks it's maybe going to come in the first quarter of the year. Here's what he had to say.
The Fed typically is very respectful of the views of the chairman. But I think the center of gravity within the Open Market Committee is shifting toward the view that labor markets are tighter, inflation pressures could grow, and therefore perhaps sooner rather than later is the time to start raising interest rates.
And so everybody's going to be looking this morning to see if Janet Yellen follows up those kinds of comments with views of her own on what the timing should be. Most people you speak to think she's not going to venture that far.
Well, you know, you've got those protesters out there, Mike, saying that they don't want to see interest rates being raised anytime soon. But some might make the case that it could help a lot of people. I mean, especially people that are on fixed incomes that aren't getting any return on their savings right now. And there's also the school of thought that maybe it might actually encourage some businesses or potential homeowners to go out and take a loan now as opposed to waiting till later, because there's the threat of interest rates moving higher. And then finally, maybe it might help banks or incentivize banks, Mike, to lend more because they're going to get paid more for that risk.
Well, the other argument on top of that, Trish, is that you get misallocation of resources. People invest in the wrong things because they're reaching for yield instead of investing in productive activities that will build the economy. Right now, they're just trying to get some sort of return on their dollar. So there's a lot of reasons to think that maybe if the Fed does start raising rates and doesn't go too far too fast, that it will be, in the long run, a benefit. And we'll look to see if anybody here makes that argument as well.
When you were talking to Marty Feldstein, did he voice any concern that we might be looking at what some could consider an asset bubble? I mean, you look at how low rates are in treasuries. People have just poured into treasuries as a safe haven play. That might be considered somewhat frothy right now. And then you look at the market seemingly hitting a new high every day in equities. There does seem to be this disconnect between fixed income and equities. What does Marty think that means?
Well, he's afraid the Fed will probably lose control of the long end of the bond market. The 10-year note yield is going to rise rather rapidly when the Fed starts talking about disengaging, because markets tend to overreact and they're going to misprice really quickly. But is there an asset bubble? That's the hardest question for any central banker to answer. As one put it to me yesterday, well, we're in a situation where the economy is starting to grow and pick up speed and interest rates are very low. Well, what happens in that environment? Stocks go up. So at this point, it's hard for them to say whether there is a bubble or not. But if rates start rising early next year, we'll find out.
Yeah, well, and that gets right back to your protesters there, Mike, where, you know, some people are concerned that the low interest rates benefit a certain class of people, but not the entire economy.